What is going on, guys? Welcome to the video. My name is Ali and I post free educational content every single week. I'm also documenting my journey to getting funded with $225K with FTMO. I'm sharing every step of the journey and I'm also including live trades as well. So if you haven't already, hit that subscribe button to stay updated with the videos and to just learn more about Forex for absolutely free. This video is going to be geared towards absolute beginners. So if you're brand new to Forex, this video is for you. We're going to be talking about how to calculate lot sizes, what lot size you should take based on the size of your account so that you don't blow your account. And also we're going to touch upon risk management towards the end of the video. So without further ado, let's just hop right into the video. All right, so what is a lot size? A lot size is the size of the position you're willing to take when you enter a trade. So I'm going to show a screenshot right now of where you would enter your lot size. It's going to be this area right here. And you can enter a micro lot, a mini lot, or a standard lot, and you can actually even go higher than that. So before I explain this table here, I want to clarify what pips are. Pips are how we measure change in price. So when price moves up, we say it moved up a certain amount of pip. If it moves down, it moved down a certain amount of pip. So your lot size is how much money you're willing to risk or earn per pip. For most brokers, the lowest lot size you can take is a micro lot. This is a 0.01 position. If you enter a trade with this position, you are risking 10 cents for every pip. The next up is a mini lot. This is a 0.1 position and you risk $1 per pip. So for every 10 pips, you're risking $10. So for the micro lot, for every 10 pips, you're risking $1. For the mini lot, when price moves 10 pips, you're risking or earning $10. For the standard lot, which is a 1.0, each pip is $10. So if price moves 10 pips, you either lost or earned $100. And you can even go to 10.00, which is $1,000 every 10 pips. So now, how do you calculate pips? So basically, when price moves from, let's say, 105.1 here to 105 flat, that's considered 10 pips. So 10 pips is basically 0.1. So when price goes from 105.1 to 105.2, that's 10 pips. If you entered with a micro lot, that would be $1. If you entered with a standard lot, that would be $100. That movement from 105.1 to 105.2 would be $100. So let's say, for example, I took a short position right here. This means I'm betting that price is going to go down. I entered right here at 105.372, as you can see right here. Let's say price comes down and hits my take profit right here. So I entered here and price came down to here. This is a 20 pip move. Why? Because our take profit is at 105.172 and we entered at 105.372. So the difference between these two prices is 0.2, which is 20 pips. So depending on my lot size is how much money I earned on this trade. So if I entered with a 0.01 lot size, I would have made $2. If I entered with a 0.1, I would have made $20. And if I entered with a 1 standard lot size, I would have made $200. This is what makes trading so powerful, is because you can make the same exact trade on a $100 account or a $10,000 account, and all that changes is your lot size. You can either make $2 or $200 on the same exact trade. So you can practice trading and becoming profitable on a really, really small account, and it'll translate directly to a large account when you're ready to put in that amount of money. So that's basically how you calculate your lot size. Now, again, if price went 10 pips in the opposite direction, I took a sell position, but price went up 10 pips, I would have lost $1 or $10 or $100 depending on my lot size. Okay, and you can take a 0.4 lot size as well. Basically, you just times everything by 4. So if you took let's say a standard lot size and you gained 20 pips, that would have been $200. But if you take a 4.00 lot size, it would be $800 because 400 every 10 pips and you gain 20 pips here. And we're going to talk about what lot size you should take based on the size of your account, and we'll go over a little bit of risk management, which I think is super important. Everyone needs to know how to manage risk, because there's one thing that we control in this market, and that's how much you risk. We can't control how much we gain, but we can control how much we're willing to lose on a given trade. And if we can manage our risk, to the point where we lose 3 trades in a row and win 1, we'll still be at break even if you manage your risk properly and you take good risk to reward ratio trades. And that is the key to being a profitable trader, is being wrong more than you are right, but still being profitable because you manage your risk. The earlier you know this, the earlier you learn this and practice this, the better off you will be. All right, so what lot size should you take based on your account size? Now, the general rule for me is I only risk 1 to 3% of my account per trade. So when choosing your lot size, it really depends on your stop loss, right? Your lot size can be different for different trades. It all depends on your stop loss. So if you have a 10 pip stop loss and your rule is to only risk 1 to 3% per trade, then let's say for a $1,000 account, 1 to 3% is $10 to $30. If I have a 10 pip stop loss, I want to use a 0.1 to 0.3 lot size because I'm risking 10 pips, right? Which is $10 to $30. If that's kind of hard to understand, go back to the beginning of the video on how we calculated our lot size. If you take a 0.1 lot size and price moves 10 pips, that's $10. So if I have a 10 pip stop loss and I'm risking 1 to 3% of a $1,000 account, I'm using a 0.1 to 0.3 lot size, and I'm risking $10 to $30, which is 1 to 3% of my account. So this is relative to any account size. So if it's a $10,000 account, let's say, and you're risking 10 pips, you have a 10 pip stop loss, then you're going to use a 1 to 3 standard lot size, which is $100 to $300. Let's say your stop loss is 30 pips, you're swing trading. If my stop loss is 30 pips and I have a $1,000 account and my rule is to only risk 1 to 3% per trade, that is going to be $10 to $30 a trade, okay? So let's start on the low end. I only want to risk $10 this trade. I would take a 0.03 lot size. Why? Because with a 0.03 lot size, I'm going to lose $3 every 10 pips. And we're risking 30 pips here. So it's going to be $369, which is almost $10. So we're going to be risking $9 on this trade, which is just about 1% of our account. On the high end of the spectrum, let's say I want to risk 3%, I would take a 0.1 lot size, which is going to be $30, right? Because 0.1 is $10 every 10 pips. So if our stop loss is 30 pips and it hits our stop loss, we will lose $30, which is 3% of our account. So that is how you want to calculate your lot size based on your account size. Find a rule. If you want to risk 5 to 10% per trade, stick to that rule, and that's how you'll be able to calculate and choose what lot size you want to trade with. For me, I only risk 1 to 3%, but I do have a larger account than most people. If you have a $100 account, risking 1 to 3% is like risking $1 to $3, and at that point, it's not really worth trading. So you might want to raise that up to 10 to 20%, but you have to be willing to lose 10 to 20% mentally. All right, so now that you know how to calculate your lot size, you know what lot sizes you should be taking based on your rule. For me, my rule is risking 1 to 3% per trade. And if I lose 3% in one day, I'm done. Okay, so in terms of risk management, these are the kinds of things that you want to practice, right? Having a set of rules that you have to follow and that you have to be disciplined on. So my suggestion to you is to only risk 1 to 3% per trade. If you win 2 trades, call it a day. Don't overtrade. Overtrading is one of those things that kill a lot of Forex traders. Let's say they lose 3% in a day. They want to keep trading, keep taking more and more trades to try and cancel out that 3%. It's not going to work like that, guys. If you lost 3% in a day, just call it a day. Come back tomorrow. And you also want to have realistic goals, right? 10% a month is a very, very good number to hit. It's a very, very realistic goal. And hitting 10% a month already puts you in the top 1% of Forex traders. I know that 10% a month on a $100 account doesn't sound good to you guys. It's only $10. But if you keep doing this over and over again and just forget about the money, worry about percentages, once you'll have the over time you'll build your confidence, and when you are ready to put $1,000 or $10,000 in, 10% of $10,000 is going to be a pretty nice payday at the end of the month. So my advice to you, if you have a small account, practice managing your risk and thinking of everything in terms of percentages, all right? Don't think about the dollar amount. Don't think about trying to make $100 with a $100 account. It's just not going to work in the long run. You're not going to do this when you have a $10,000 account. So why do it when you have a $100 account? Again, don't overtrade. If you win 2 trades in a day, call it a day. Don't take a third trade, because that third trade is going to end up being a losing trade and you're going to end the day off pissed. It happens to me all the time. I'm still working on it. I'm still trying to build that discipline. But if you win 2 trades, call it a day. If you win 1, lose 1, take a third, and call it a day after that. If you lose 2 trades in a row, call it a day, right? If you lose 3% in a day, call it a day. And the biggest piece of advice I can tell you guys, especially if you're beginners, if you have a small account, please don't worry about the monetary gain. Just think of everything in percentages, and it'll translate directly to when you have a big account, and you'll thank yourself for it. This isn't a get rich quick thing. This is something that you're going to do on the side with your day job for a very long time. It's going to take a very large account for you to do this full time. I'm not going to start trading full time until I'm funded with at least 100K, because 10% of 100K is $10,000 a month. So if you have a $100 account or a $500 account, just focus on gaining 10% a month. Forget about the monetary gain. Keep your day job and practice. You guys got this. I believe in you. If you enjoyed the video, give it a thumbs up. If you learned something new as well, subscribe to the channel. I post free educational content every week. I'm also documenting my journey to getting funded with 225K with FTMO. You know, I post live trades and I document every single day of the journey, every step of the way. You guys will learn a lot from that, and it's also really nice motivation. So subscribe to the channel, stay tuned, comment any questions you have. I'll answer every single person's questions, and that's going to be it for this video. I'll see you in the next one.